Good day, everybody. I'm Barry Parker, and I'd like to welcome you to Capital Link's Trending News podcast series. Today, we're privileged to have with us Constantin Baack, the CEO of Oslo-listed MPC Containers. And it's a major container shipping company focused on interregional trades. So just yesterday, MPC Containers released their Q1 2022 results with earnings. And in our discussion, we're going to talk about the sector fundamentals and the outlook, as well as on MPC's performance and strategy. So I'm going to welcome Constantin, and we're going to just start the discussion in a minute. Welcome aboard.
Great. Thanks, Barry. Thanks for having me. Thanks to you and the Link team.
Delighted to have you. Let's talk about, containers have certainly been one of the sectors that's been in the news. So let's kick it off. Talk about the current state of the container market and the outlook for your sector, the drivers and geopolitical factors. And I'd just like to, for the viewers, I think most of the viewers would know this, some of the very, very large container ships, 20,000 boxes, those are the ones, there are a lot of pictures of that. That's not what we're talking about. The interregional segment, the ships are more like 2,000, 3,000 boxes. So it may be a different set of fundamentals than folks might hear in some of the other news. So go ahead, Constantin.
Sure. Obviously, if we look at the current state of the container market in general, macroeconomic uncertainties have clearly increased in general significantly over the past couple of weeks, be it the Russia-Ukraine conflict, the zero COVID policy in China, inflation, reduced growth outlook, etc. So despite all this, the container vessel market has remained fairly tight. Those macro uncertainties have been caused by, or have basically caused a bit of a wait and see position when it comes to the charter market. Time charter rates have softened a bit over the last weeks. However, they are still at historically elevated levels due to the ongoing congestion, for example, supply chain disruptions, and also still solid demand. And what we have also seen, and I think that's very interesting, a structural shift that the charter market has experienced within the past year towards more of a forward fixing. That means you do not only fix your charter out your vessel that comes open in the next 10, 20, 30 days, but you're actually able to secure a long-term charter for a vessel that is not open until Q4 or Q1 next year. And that is a very decisive and interesting shift, because that takes a lot of capacity out of the market and basically has translated into a very reduced and low vessel availability going forward. One example, usually in the last 3 years, you had like 1,500 vessels being available to the charter market. And this year, we only entered this year with only 400 to 450 vessels being available. And most of them are now chartered out on long-term charters. So for the remainder of the year, we only see 200, 250 vessels available to the charter market, which is unique and which in my view will be a very decisive factor when looking at the market going forward. That's basically where we are in the very, let's say, short-term view and current dynamics of the container market.
So what you're describing, that's is that across the board for the different ship sizes, or is it particular to your sizes, which are the smaller size vessels?
It is relevant for the overall market, but I think it's very unique and unheard of in the smaller sizes, because between 2008 and 2020, we have seen more short-term charters, and hence vessels were readily available. And this number of 1,500 vessels were available to the charter market each year, again and again. So that made planning for owners like us a bit more difficult, but it made flexibility for liner operators a bit easier. And now we have moved into a situation where, in particular for the smaller sizes, this is a shift in trend, and that, in my view, will translate into more sustainable charter market for the years ahead.
Yeah, longer charters. Let's talk about, well, yesterday you released the results. Just if you can just mention some of the highlights and achievements of the Q1.
Sure. I mean, first of all, we are pleased to have reported another strong quarter for MPC Container Ships. We have been able to sustainably grow our earnings and profits, which is good. And for Q1 2022, we had revenues of around 140 million, EBITDA of around 135 million, and net profit of nearly 120 million. So this is an outstanding quarterly result, and we are very happy to report that. And on the back of that, we have been able to announce an increase in our recurring quarterly dividends by 18% compared to the previous quarter, which was already a good quarter. So in total, the dividend declared yesterday is roughly $70 million or $0.16 per share. And that also includes a so-called event-driven distribution, which is linked to a vessel sale that we have conducted. So we have a very clear policy on our distributions. I'm sure we'll touch on that later on. And I think the interesting part is year to date with MPCC, we have declared 270 million of dividends, of which 200 million have already been paid out and 70 million are lined up to be paid out very shortly. So that is a very sizable, $250 million in dividend in the first 3 months, basically very sizable distribution. And we look forward to more distributions in the quarters ahead. On the back of, and I think that is probably worth noting for our first quarter, revenue backlog of roughly 1.7 billion and an EBITDA backlog of around 1.4 billion, which enables us to kind of cater for a sustainable dividend down the road. And that is very interesting. And lastly, but certainly not least from an operational standpoint, if we look at the first quarter, we have been able to extend 23 new charters for, let's say, long-term periods, partly ahead of the expiry. As I said earlier, that is the general shift that we've seen. In particular, for example, charters that only expire in Q1 next year. And we have been able to contract new charters of up to 4 years for these vessels, enhancing our backlog. And very interestingly, we have also taken out our first new building orders in the first quarter in a transaction which I would argue is fairly unique. We have contracted 2 5,500 TEU container vessels that are ready to be converted to run on green methanol once that fuel is available, and for the time being can run on conventional fuel. And those vessels we have contracted simultaneously with a charter, and the charter basically de-risks the whole project over the first initial period of the charter, which is unique to order a new build that you can already de-risk over the first 7 years of operation. So something that we think is a very attractive and accretive transaction to build upon going forward.
Well, it sounds like the with the charters, with the length of the charters, is that something that you see that's going to be a remaining characteristic of your market for some time? Because that strikes me like it's a real shift from what you said used to be month-to-month charters, and now you're talking in terms of years. Is that something that's going to remain in the market even when the word supply chain gets out of the news every day, or is it something you think might work back to shorter term in the years ahead?
Well, I personally think that due to the fact, what I said earlier, that there is fewer charter vessels on an annual basis available, that will lead to a more sustainable charter market in terms of rates and periods. I'm sure we will see a bit of a softening down the road, but I mean, we are at historical heights. I mean, we have a situation where you can lock in 3-year charters at 40,000, 50,000 for vessels of our size. That is very sizable and secures a very strong EBITDA and revenue backlog. So I would assume that we go back to slightly shorter periods and slightly lower rates, but not significantly. And I think that is worth noting that we are now at a historical high, but I believe that all the market parameters suggest that we will not go down to the very short charters anytime soon. In particular, because the disruption is not over yet, right? I mean, we know that China is in lockdown as we speak. Port of Shanghai has handled 25% less containers in the month of April. So there's a lot of backlog. And once this backlog is resolved out of China, then it will be relocated to the US, for example, or to Europe, where the boxes have to be cleared.
Yeah.
And I definitely expect that there will be more congestions and more disrupted supply chains once China is open, which will also fuel more demand for vessels, actually.
Yep. Yeah. There's a lag, I guess, of a month, and then the congestion will move from the loading port to the discharge port. So that's something on tap likely pretty soon. Yeah, we'll get on fleet renewal. You mentioned the deal that you did. You have some new vessels coming on with the charters, with their longer term charters. Is that going to be? And again, I'd contrast that with let's say buying vessels in the sale and purchase market. Is that going to be a real ongoing shift in the MPC strategy, or is that something opportunistic that was a good deal that you took? I wonder if you could give us your thoughts on that, on the fleet renewal, how it might work.
Sure. Let me start with the principle that we have. I mean, as a ship owner, it's all about market timing, entry price, or any other ways to mitigate residual value risk, either via charter or via a low entry price. So this is how we build the company, and this is how we will continue to operate. In general, I firmly believe that there are times to deploy capital and be a bit more aggressive, and then there are times to be a bit more patient, but not inactive and not leaning back, but a bit more patient. And we continuously developed our portfolio since the significant expansion in 2017-18, when we bought most of the ships at very attractive prices. And since then, we have selectively optimized the portfolio. We have divested vessels, we have acquired vessels by way of M&A, for example, by using our currency. So this is an ongoing process as far as fleet renewal and portfolio composition is concerned. Now, when looking at your specific questions going forward, I mean, we will definitely continue to look at new deals. We believe now, and that's also documented in our dividend policy, now is the time in terms of capital allocation to also return capital to investors, without distributing everything and not being able to make use of opportunities as they arise, but be very selective on growth opportunities. It's a lot of uncertainty out there. It's uncertainty about the right propulsion going forward. It's macro uncertainty. So I think one should be, very aware of these risks, but at the same time, this also constitutes a lot of opportunities. So we clearly see that there are more transactions to be done. We believe at the moment one should be more selective because simply prices have increased. And whilst you can obviously charter out the vessels, we believe that one should be selective in taking growth measures. What we do, we further delever the structure to be able to transact whenever we want. We have an industry low leverage and a very flexible balance sheet with more than 30 vessels being unencumbered. So we can act anytime. But we also want to maintain our commitment to returning capital to investors, as we've done the last quarters, and to continue to delever and make use of also some of the free cash flow capacity that we have to carry out investments, for example, on the new building side, but only in a similar or not dissimilar risk profile compared to the vessels that we have ordered. So we will be very selective, but I'm sure there will be opportunities to renew the fleet.
Okay. You mentioned before, you have, I think you called it a special dividend, which will be paid out when particular transactions happen or certain events happen. I wonder if you can just go into a little more detail on that and give some examples, if you could, of how that would work.
Sure. I mean, we have implemented a two-pillar distribution policy. One is based on a, let's say, quarterly distribution, 75% of adjusted net profit, adjusted for example, vessel sales, because that, I'll get to that in a minute, is subject to a event-driven distribution. So we normalize it for special events, but we pay out 75% of our net profit, which is for the first quarter is roughly $57 million. That's the dividend on the recurring part. Then the second pillar is an event-driven distribution, and that we have catered for in case, and we have done that twice already this year, in case we sell vessels and we get sales proceeds, and we then distribute up to 100% of those sales proceeds by way of an extraordinary dividend to shareholders. That's where the difference in those two schemes comes about. In 2022, we have so far paid out roughly 150 already in event-driven distributions. Another 15 is to come in the next few weeks, and we have around 105 to 110 million in recurring distribution paid out. So a very sizable amount, and that is the strategy going forward, to pay out significant part of our cash flows or use it potentially for share buybacks, but certainly return it to shareholders, and that is how we will go about it going forward. Again, that goes back to what I said earlier in terms of capital allocation, and now it's time to also return capital investors. We will not distribute everything. We will stay flexible, we will stay agile, and we will be able to make use of opportunities given our balance sheet structure and our industry low leverage.
Okay. On the buybacks, I guess if you're, I guess you have certain targets. If the shares would dip a little bit, that's how you'd decide to implement those buybacks.
Yes, I mean that would be opportunistic. I mean, at the moment, we first of all wanted to implement a very clean and clear dividend, and we have done that over the last 2 quarters. We will continue to pay a dividend, but to add share buyback, as we've done in the past, by the way, is certainly a measure that we would not rule out.
Okay, let me. I'm going to shift the topic a little bit to ESG. Environment, social, and governance, and that's been very important. And I did take a look at you published an ESG report not too long ago. It's just very very comprehensive, and the I think my reaction to it, certain companies we're kind of in a state of flux on how people report things. And I know for some companies there's going to be new rules coming around, but I have to compliment you on the excellent and wide-ranging ESG report that you put out, and I'd encourage the listeners to get an opportunity to take a read of that. But I wonder if you could talk, Constantin, about some of the major ESG initiatives that you have going on.
Sure, and it's obviously a I would say session filling topic, but I'm happy to give a bit of a sneak preview, and I really suggest that everyone reads through our report because it sketches out the various details and initiatives. Obviously, it is our second ESG report, actually our third ESG report already. That we have published in March 2022. We have implemented our ESG policies for us and our business partners, covering environmental, meaning clearly sustainability aspect that we also factor into our economic and investment decisions. We look at sustainable procurement measures, so look through our procurement activities, obviously reducing our footprint. We have very, as an example, we have initiatives with some of our good customers from the liner industry. We have, for example, invested in different new painting systems to reduce emissions. So there are various initiatives that we carry out. We have a very clear ship recycling policy to carry out everything, not just in accordance with applicable laws, but to be very well aware of human health and safety matters. On the social side, obviously a lot of that is related to our crews, a very relevant topic today and over the last 2 years. And we operate with health and safety of our crew and our employees being the highest priority. especially in these times, right? I mean, you see the let's say disastrous development in the Ukraine. We have actually set up with our crew manager a rescue fund to financially also support crews on the ground. So there are various initiatives that we pursue in that respect. And then obviously on the governance side, we are a member of the anti-corruption network in shipping, and we also acknowledge the impact we have on our business partners as well as also indirectly on their subcontractors, and we'll certainly stick to the human rights conventions, etc. So there are a lot of things that we are doing during COVID, vaccination, COVID testing of our crews. I mean, there has been a lot that we have been doing, and there's more to come. And I just can repeat what you said, encourage everyone to look at the ESG report, which gives even more insights on what we are doing.
Yeah, no, it was very impressive. I read it, and what struck me with some companies that are reporting, it tends to be the E part, but in yours it goes quite a bit into the to the S and G. Do you find that some of your customers are starting to pay attention to that? It may be early days on that, but is that something you're hearing about from your customers?
In terms of ESG, you mean?
Yeah.
No, absolutely. Absolutely. And it's, I mean, it's not just our customers, it's obviously in the end, the consumer, the end user, everyone is aware of that, the world needs decarbonization, for example. That's obviously the E is the most, let's say, prominently quoted letter of the ESG. I think S and G are also very important, obviously, but the E is something that we see more and more coming to also the surface in terms of end users, consumers requiring a very clear stance on that. So that clearly is something that we spend some time on. I mean, our new builds actually show that you can combine a let's say reduction of the let's say environmental footprint with a good investment, and that is things that we continue to look at, and that is also what I think will drive the energy transition also for the maritime industry, and we are more than happy to take part and take our share in it.
Yeah, no, it's exciting. It's exciting times for sure. Let's switch the topic again. Just talk about the trading venue for the shares. You're listed in the Oslo market, which is a well-known market. I'm not familiar with the liquidity there, and I guess from my accent and my background, I'm in New York, so my obvious question is, would you consider switching over to the New York exchange or one of the markets over here?
Oh, and we have looked at it. Obviously, the listing in the US has a lot of benefits. We however, started in Norway, and we think, I mean, the Norwegian market in terms of IPOs in the maritime sector over the last decades is the more prominent one than New York. Not by virtue of size, but number of listings in any event. It is very easy to transact, and it's a global spot. It's the second largest in terms of market cap shipping or maritime hub from a capital market standpoint. So share liquidity in Oslo is good. I mean, we are part of the OBX index, which is the 30 most liquid names in Norway. So you have big names like Equinor and others. So our liquidity is actually fairly good. Also, if you compare our liquidity with, let's say, US container peers, we don't have to hide. I think we actually have better liquidity than most of the US names in a way. So it's not necessarily. Having said that, the US is obviously a very attractive exchange, and a listing in the US is always a possibility, but it is not an immediate priority for us. But we have looked at it in the past, and we definitely consider it. We actually have quite a number of US investors also in MPCC, so it's not that we don't have any US investors because we are in Norway. We have quite some interaction with the US investor market, but can always be more. And the US listing is something to consider, but certainly also bringing US investors to invest into a Oslo listed company is what we expect going forward even more.
Okay, well, it sounds like you have a pretty good formula. So maybe, you know, as we say here, why mess with something that's working very well? All right, I guess we're kind of running out of time. So I'm going to let you just sum up the investment thesis, just the highlights of you know, the major investment highlights, and what should an investor take into consideration?
Sure, Barry. And I mean, we are a very focused container company. We have a focus on the intra-regional segment. I think this is the segment that over the last decade has grown the most. People are obviously more looking at the big sizes because that's where the news sometimes focuses on. But I mean, the intra-regional market is by virtue of number of vessels by far the largest segment in container shipping, actually. So we have a very dedicated focus. Not a lot of people have that on that segment. We have a significant EBITDA backlog, so very visible, tangible dividend streams for investors and for our very own matters. We have the lowest leveraged balance sheet among our peers, more than 30 vessels unencumbered, high flexibility and ability to act, and also proven execution capabilities, which I think is very important. If the cycle is there, if the opportunity is there, you need to go out and take it. But at the same time, as I said, you should be patient at some point in time and not rush into it and develop these opportunities. So I think in sum, we are a very attractive partner for investors to partner with. We have a clear capital allocation policy, proven capital allocation policy. We haven't done any crazy stuff. We walk the talk on dividends, we walk the talk on capital allocation, and we have a very good industry network. So overall, I think that is a few differentiating factors compared to others, and we obviously look forward to developing the company further.
Well, it's a great story. So Constantin Baack, I want to, from MPC Container Ships, I want to thank you for coming on. Great to talk to you, and it's a great story. So that's going to conclude our episode. Thank you very much, everybody.
Thank you, Barry. Thanks for having me. Take care.
Bye-bye.
Bye-bye.